You know, I don't often give investment advice that can be summed up in a single sentence. It's usually a little more nuanced, but there is one thing, one fundamental, life-changing principle that separates those who build lasting wealth from those who simply work for money their entire lives. And it's the same thing my friend Robert Kiyosaki talks about in his book, Rich Dad, Poor Dad. He just uses different words than I do. Most people spend their lives chasing a paycheck. They work hard, they get a raise, they spend a little more. They buy a bigger house with a bigger mortgage. They're on a treadmill, running faster and faster, but never actually getting anywhere. They are buying liabilities they are told are assets. My poor dad, God rest his soul, thought that way. He believed a good job, a steady salary, and a nice house were the ultimate goals. That was his entire financial blueprint. My rich dad, well, he thought differently. He taught me that the rich don't work for money. They make their money work for them. And that, right there, is where Robert and I find complete agreement. You see, I don't look for a job. When I look at a company, I look for a machine. I ask one simple question. If I put $1 in this machine, how many dollars will it spit back out over time? A truly great business is a machine that consistently turns a small amount of money into a larger amount. It generates cash flow. It owns income-producing assets. That's what I do with Berkshire Hathaway. We don't collect paychecks. We collect companies that are themselves powerful, money-making machines. See's Candies, Geico, BNSF Railway, they are all assets that work for us, day and night, rain or shine. The average investor, however, does the opposite. They buy a stock and hope the price goes up. That's speculation. It's hoping someone else will pay more for it later. That's not investing. That's gambling. Real investing is about what the asset puts in your pocket, not what you hope someone else will pay you for it later. Your goal shouldn't be to find a better job. Your goal should be to acquire better assets. An asset isn't just a stock or a bond. It's anything that puts money in your pocket. It could be a business that doesn't require your presence. It could be intellectual property, a book, a patent, a song. It could be real estate that generates rental income. Your house, it takes money out of your pocket with taxes, insurance, maintenance. That's a liability. Don't confuse the two. The most important investment you will ever make is not in a stock or a piece of property. It's in your own financial education. It's in learning the difference between an asset and a liability. It's in building your own financial blueprint. You have to mind your own business, and your business is building your column of assets. What you do for a paycheck is your profession. What you do with that paycheck, that's your business. So the next time you have $1 in your hand, ask yourself my favorite question. Is this a seed or is this lunch? If you eat it, it's gone forever. But if you plant it, you might just be surprised by the orchard that grows. The single most powerful force in this universe is compound interest. But it needs time and it needs fuel. Your assets provide the fuel. Stop working for money. Start building machines. It's not the complicated. It's just that very few people are willing to do it. The asset vs. liability mindset, your financial blueprint poor mindset, works for a paycheck, buys liabilities e.g. expensive car, big mortgage on primary home believing they are assets. The goal is to spend. Rich mindset uses their paycheck to buy true income-generating assets, businesses, royalties, rental properties. The goal is to acquire machines that earn. Your most important job is to mind your own business, building your asset column. Make money work for you, not the other way around the treadmill. Most people trade time for money. A raise leads to more spending, keeping them on the hamster wheel forever. The machine, true wealth, is built by acquiring assets that generate cash flow 24/7. It's not about the price of a stock. It's about the cash flow it puts in your pocket. This is how you harness compound interest, the world's most powerful financial force, the asset vs. liability mindset, your financial blueprint, If you want to understand how someone's financial life is going to turn out, you don't need to see their bank statement. Not really. All you need to do is understand their personal blueprint. The map they're using to navigate the world of money. Most people, through no real fault of their own, are working from a faulty map. They've been taught that the goal of the game is to work hard, earn a high salary, and then go out and acquire stuff: a shiny new car, a boat, a big beautiful house with a 30-year mortgage, and they call these things assets. That's the fundamental error. That's the crack in the foundation that eventually causes the whole house to wobble. Let me tell you what an asset is. An asset is quite simply something that puts money in your pocket. It works for you while you sleep. It's a little soldier you send out into the world to bring back a portion of its earnings to you. A wonderful business you own a piece of. That's an army of soldiers. An apartment building that generates rental income after all expenses. That's an asset. A patent that pays royalties. That's an asset. Now, a liability. A liability is anything that takes money out of your pocket. That new car, the moment you drive it off the lot, it's worth less than you paid for it, and it starts demanding insurance, gas, and repairs. It's a pet that you have to keep feeding. Your primary residence, for most people, it's a liability. It comes with a mortgage, property taxes, insurance, and upkeep. It takes money out of your pocket. Now, it might appreciate in value over time, and that's fine, but don't confuse that with it being an income-producing asset. It's a hope, not a machine. The entire game of building wealth is about consciously, deliberately, and relentlessly increasing the number of things that feed you and decreasing the number of things that you have to feed. This is what I mean by your financial blueprint. It's your ingrained mental model for what to do with a dollar that comes into your possession. The blueprint of the average person says, spend it. Maybe it says, save it, which is better, but saving is just deferred spending if that money isn't put to work. The blueprint of a wealth builder says, where can I deploy this dollar so that it will come back to me with friends? Your profession is what you do for a paycheck. Your business is what you do with that paycheck. Your business is building your column of assets. Never confuse the two. You can be a brilliant doctor. That's your profession. But have a bankrupt financial blueprint if every dollar you earn goes out the door to feed liabilities. So audit your life, make a list. On one side, write down everything that puts money in your pocket each month. On the other, write down everything that takes it out. Your goal is not to make the right side zero. We all need a place to live and a car to drive. The goal is to make the left side grow so large that it can not only cover the right side, but do so with plenty left over to reinvest, to buy more soldiers. That's how you change your destiny. You don't do it by earning a slightly higher salary. You do it by changing your blueprint. You stop admiring the things other people buy with their money, and you start admiring the things they own that make them money. You shift your focus from the showroom floor to the balance sheet. It's a quiet, undramatic process, but it's the only one that works. Make money work for you, not the other way around. There's a famous story about a man who stops a fisherman and gives him a lecture on how he could scale his business, build an empire, and eventually list his company on the stock exchange. The fisherman asks, then what? The man says, then you could retire, move to a small coastal village, and spend your days fishing and relaxing with your family. The point of that story isn't that business is bad. The point is that most people spend their lives on the hardest possible path to a simple destination. They are so busy working for money that they never stop to design a system where money works for them. The treadmill is a brutal machine. You work an hour, you get paid for an hour. You stop working, the pay stops. You want more, you have to run faster, work overtime, get a second job. It's a linear equation. Your energy and time are the inputs, and money is the output, but you only have so much time and energy. The treadmill has a natural, physical limit. The alternative is to build a machine to harness compound interest. Now, people throw that term around, compound interest, but they don't feel its weight. It's not a financial term, it's a force of nature. It's the eighth wonder of the world, but for it to work, it needs two things, time and fuel. The fuel is the capital you feed it, and that capital doesn't come from your sweat alone. It comes from the assets you acquire. When you own a stock that pays a dividend, that dividend is a product of the machine. You didn't have to show up to a meeting to earn it. The machine, the company, earned it for you. When you own a bond that pays a coupon, that's the machine working. When you own a rental property that produces positive cash flow, that's the machine working. Your job is not to run on the treadmill faster. Your job is to be an engineer, to design, build, and maintain your own personal factory of wealth, producing machines. Every dollar of income from your labor that you don't spend on liabilities is a piece of machinery you can buy. A new cog, a new gear. The magic happens when the output from your first small machine is enough to buy the next piece of the machine. And then those two machines together produce enough to buy a third. At first, it's slow, it's frustrating. You look at the small dividends and think, this is nothing. But you have to be patient. You're building a snowball at the top of a very long hill. The goal is to reach a point where the cash flow from the assets you own, the machines you've built, exceeds your living expenses. At that point, you are free. You are no longer trading your time, your life for money. Your capital is doing the heavy lifting. You have harnessed the force. You've gotten off the treadmill and into the control room. It doesn't require genius. It requires discipline and a long-term perspective. It requires saying no to a lot of things you want today so you can say yes to everything you want tomorrow. It's about recognizing that the greatest luxury item you can ever purchase is your own freedom. And you don't buy that with a paycheck. You buy it with the machines you build, one cog at a time. That's the sound you need to get comfortable with, the sound of time passing. Most people hear that ticking and feel anxiety. They feel time running out on their dreams, on their energy, on their chances. They feel the pressure to make a quick fortune, to find a shortcut, to hit a home run. But that's the treadmill talking. That's the voice of someone who hasn't yet made the mental shift. When you're building machines, that ticking is a comforting metronome. It's the sound of your compound interest working. It's the sound of your rental properties appreciating. It's the sound of your businesses growing their earnings. Each tick is another moment your money is working for you, while you're reading a book, or having dinner with your family, or sleeping. The market is designed to transfer money from the active to the patient, from those who are frantic to those who are calm, from the speculators jumping in and out to the investors who simply buy a wonderful machine at a fair price and then have the discipline to leave it alone. Let me be clear about something. Making money work for you isn't about passivity. It's about focused activity in the right areas. The work isn't in the frantic buying and selling. The work is in the thinking. It's in the research. It's in the reading of annual reports until your eyes get tired. It's in understanding a business so thoroughly that you feel you could run it yourself. It's in driving through neighborhoods to find a good property. That's the work, the intense intellectual work of finding a truly wonderful machine. Once you've done that work and you've made the purchase, then you become passive. You let the management you've vetted do their job. You let the tenants pay down the mortgage. You let the world discover the value you saw early. Your active work is done, and now the passive income begins. You switched from being the engineer who designed the machine to being owner who collects the output. This is why financial education is the ultimate asset. It's the one thing they can't tax away from you. They can't inflate it away. A sharp mind, trained to spot a real asset, to understand a balance sheet, to see the difference between a fad and a durable competitive advantage. That's the master key. That's the tool you use to build all the other tools. So start where you are. Audit your cash flow. Find one single dollar you can redirect from a liability to an asset. Buy one share of a wonderful company you understand and plan to hold for a lifetime. Read one book on accounting. The size of the first step doesn't matter. The direction does. Stop thinking about your net worth in terms of the value of your stuff. Start thinking about it in terms of the monthly cash flow your assets generate. Aim for that number to grow month after month, year after year. That number, more than any other, is the scoreboard. That is the measure of your freedom. The goal is to wake up one day and realize the treadmill has stopped. Not because you're too tired to run, but because you simply don't need to anymore. You can step off, not onto shaky ground, but onto a foundation built by the machines you spent a lifetime wisely assembling. You can finally hear that clock ticking and smile, because it's no longer counting down. It's just ticking, and you are free. So, where does all this leave us? It leaves us with a simple choice, really. One of the few truly simple choices in a complicated world. You can choose to spend your life on the treadmill, working harder and harder for a paycheck, trading your days for dollars, hoping the machine never stops because you can't afford to get off. Or you can choose to become an engineer, to use your mind, your discipline, and your time to build your own machine, to acquire assets that work while you rest, to make compound interest your most loyal business partner. One path is about earning, the other is about owning. One is about the appearance of wealth, the cars, the watches, the big house that owns you. The other is about the quiet, undeniable reality of wealth, the financial freedom that comes from a column of assets that feeds you. The blueprint is everything. Your financial education is the master key, and the time to start laying your first brick is not tomorrow. It's today. It's with the very next dollar that comes into your hands. Ask it the most important question it will ever be asked. Are you a seed or are you lunch? Then plant it, water it, be patient, and then one day you'll look up and find yourself standing in the shade of an orchard you built yourself. An orchard that grows whether you're there to tend it or not. That's the goal. That's the only goal that matters. Not to be rich, but to be free. Thank you.